Imagine this. You crack a job with a 15 LPA package. You tell your parents, they're proud. You tell your friends, they're impressed. You mentally start budgeting 1.25 lakh a month. You thought about a new flat, a better lifestyle, SIPs. Then your first salary hits the account and it's 92,000 only. Wait. Where did 33,000 go? I welcome you to this video, the gap between CTC and in-hand salary. And if nobody has explained this to you before, you are about to learn something that will change how you evaluate every job offer for the rest of your career. So let me start with something most people don't realize. India is one of the few countries where your offer letter and your bank credit are two completely different numbers. In the US, they offer you $100,000. That's what exactly earned. Taxes come out of it, but yes, the number is real. But in India, we have CTC, cost to company, and CTC includes things that never touch your bank account. Today, I'm going to take a real salary structure, example, 15 lakh CTC, and break it down by line. By end of this video, you'll be able to read any salary slip, negotiate your offer, and understand exactly where your money is going. So let's dive in. Section number 1, the foundation. Let's start with the most important number on your salary slip. Basic salary. Typically, it's 40 to 50% of your CTC. On a 15 lakh CTC, let's say basic is 7.5 lakh, the half of it, that's 62,500 a month. Why does basic matter so much? Because everything else is calculated off this number. Your HRA, PF contribution, bonus, and gratuity. If your employer keeps your basic low and inflates other allowances, it might look like you are getting flexibility, but you are actually getting less retirement saving, less HRA exemption, and lower gratuity. So lower basic equal to lower long-term wealth. You must remember that, which one you need to select. Section 2, allowances. What do you get? What do you keep? In the next block, we'll discuss allowance, HRA, house rent allowance. Typically 40 to 50% of basic. On 62,500 basic, HRA is around 25,000 a month. Here is what most people don't know. HRA is tax exempt, but only if you are paying actual rent. And the exemption is the lowest of these three numbers. Number 1, actual HRA received. 2, 50% of basic for metro cities. 3, rent paid minus 10% of the basic. Then you have special allowances. This is basically a filler, fully taxable. Many employers stuff money here to make CTC look bigger while keeping PF and gratuity obligation at the lower side. Conveyance allowance, medical allowance, LTA. These are all small, but they add up, right? Section 3, the hidden CTC components. Now let's go back to our topic today, and this is where it gets really interesting. Your CTC includes things you will never see in your bank account. Let's see. Employer PF contribution, 12% of your basic, 7.5 lakh basic, that's 90,000 a year PF. It's in your CTC, but it never goes straight to your bank account. It goes to EPF account. Logged till retirement or specific conditions. Gratuity, 4.81% of basic, that's around 36,000 a year. On your CTC, that's one only you get after completing 5 years with the same employer, right? So what if you leave before 5 years? You lose it completely. Shocking. Then insurance premium, meal card, wellness benefits, all part of CTC. None of this hit your bank account. These 5 components alone can be 15 to 20% of your total CTC. That's why 15 lakh package becomes 12 lakh of actual earnings. Section 4, deductions. where your money actually goes. Now let's get to the deduction section of your salary slip and read the deduction one by one. Employee PF, 12% of your basic on 62,500 basic, that's 7,500 a month. Professional tax, of course, it varies by state, typically 200 rupees a month. Income tax, TDS, right? This is where the old versus new regime decision hits your take home salary directly. Under the new regime, lower rates but no deduction. Old regime, higher rates but HRA, ATC, home loan interest, you can reduce your taxable income. But on a 15 lakh CTC, the difference can be just 5 to 8,000 a month, depending on your, whatever all investments you have. I did a full deep dive on the old versus new tax regime in another video. Check that out if you want the complete analysis. But the key point, your tax regime choice directly changes your in-hand salary. I'm sure you know that. Section 5, the real take-home calculation. So now we will calculate and show you how, the full math of it. 15 lakh CTC, basic 7.5 lakh, HRA 3 lakh, special allowance 2.5 lakhs, other allowances 2 lakh. Employer PF, not in your bank, 90,000. Gratuity, not in your bank, 36,000. Insurance, 20,000. Your gross monthly is about 1.08 lakh. That's 1,08,000. Deduction, employee PF 75,000, PT 200, TDS roughly 13 to 15,000 depending on your regime. So net take home salary approximately becomes 92,000 to 94,000. That's 74% of your monthly CTC expectation, what you expected initially. This is it is absolutely normal. If anything, is healthy structure. Some companies keep basic at 30% and stuff the rest into special allowances. Your take home might be higher, but your PF, gratuity, your long-term wealth will suffer. It will slow down. Section 6, how to negotiate better. Now let's go back to the most practical part. Next time you get a job offer, don't just look at the CTC number. Ask for the salary structure. Check these 3, best practices below. Number 1, basic as a percentage of CTC, aim for at least 45 to 50%. Number 2, how much is variable pay fixed? Variable pay can be 10 to 30% of your CTC and may never materialize. Number 3, what's the in hand? Ask them to calculate it for you. They will do it. Any good HR team can give you an approximate take-home figure. I'm sure the answer will surprise you. It's almost always lower than what you calculated in your head. Yes. Let me know in the comment when was the first time you got shocked by the gap between your CTC and in-hand salary. Remember, your salary slip isn't just a piece of paper, it's the single most important financial document you receive every month. So you need to understand it. Understanding it, the baseline of your financial literacy. If you don't know where your money is going before it reaches you, how can you plan where it goes after, once you receive it? If you want me to make a video on how to actually get a better salary structure, I'm not going into much higher salary. I'm talking about the structure only, specifically what to ask for and how to ask for it. Let me know in the comments. Hit subscribe. Yes, thanks for watching. We'll see you again.